Hi, I'm Heather from Hello Divorce. One of the most important and unavoidable steps in a California divorce is doing your financial disclosures. These aren't just busy work, they make sure both spouses are on the same page about money, so you don't have to stress or worry that something is being hidden. So, who has to do disclosures? In every California divorce, at least one spouse must complete disclosures. If your spouse never responds to your petition, only the person who filed, the petitioner, needs to do them. If your spouse does respond, then both of you must exchange disclosures. But wait, in certain counties, both spouses must file the disclosures no matter what. And I'm going to put a list right here so you can see what counties those are. So which forms do you need? Here are the main forms you'll use. First, there's the FL-140, the Declaration of Disclosure. This is basically a cover sheet. Then there's an FL-150. This is the Income and Expense Declaration. It lists your income and your monthly expenses. Next is the FL-142, Schedule of Assets and Debts. This lists what you own and what you owe with some supporting documentation. And there's also an FL-141, which is the declaration regarding service of the disclosure. This is something you'll file with the court to prove that you actually served your spouse the disclosures. And in an uncontested divorce, once you've exchanged this first set of disclosures, you'll usually both sign FL-144. This is a stipulation and waiver of final declaration of disclosure, so you don't have to repeat this process later. What exactly do you need to disclose? You have to provide details on four main areas: income, including the last 2 months of pay stubs, 2 years of tax returns or business earnings, your expenses. This is stuff like rent, your mortgage, utilities, transportation and childcare, your assets, bank accounts, retirement plans, real estate, vehicles, investments, even household values. But I'll put a caveat there. I would say if they're expensive or important, or you want to be naming them in your divorce agreement. You'll also be naming your debts: credit cards, mortgages, student loans, car loans, all of those things. Something we hear from our clients all the time is, I don't have anything joint with my spouse. We don't have to disclose anything, right? Well, that's not really true. Why these disclosures matter is that California is a community property state. That means that anything purchased during the marriage with marital money, that's money that either spouse earned during the marriage, belongs to both spouses, even if it's only in one person's name. A car bought during the marriage, but titled to one spouse, that's community property. Retirement savings that were added during marriage, that's community property, even if it's only in one spouse's retirement account. Furniture or electronics bought with marital income, also community property, even if one spouse says it's not theirs and doesn't want it. This is why disclosures exist. So there's no guesswork, no hidden surprises, just a clear financial picture both spouses can rely on. So here's the bottom line. Financial disclosures are mandatory in every California divorce. There are no exceptions. At least one spouse must do the disclosures, and in many counties, both spouses must do disclosures. And if a spouse responds to the divorce petition, both spouses must do them. The required forms are FL-140, FL-150, FL-142, and FL-141. And in uncontested cases, you'll usually waive final disclosures with FL-144. You must disclose income, expenses, assets, and debts, so everyone is working from the same fact. Pro tip: Hello Divorce's software makes these disclosures a snap. And we help people complete your disclosures correctly, file them with the court and your spouse, avoid delays, and reduce stress. Check out the link in the description for more resources, and subscribe for step-by-step divorce guidance. Thanks for watching.